Hello and welcome to the Friday edition of the Sharesify podcast. I'm joined as always by my friends and colleagues, James and Steve. How are we, gents?
Very well, thanks.
Now, today, US markets are closed, stock and bond markets for Juneteenth. That celebrates emancipation in the US. On the 19th of June, 1865, Union troops arrived in Galveston, Texas to declare the Civil War was over and all slaves were now free. So that's your history lesson for today. Onto the markets. And chaps, we might actually get away without mentioning a certain space technology stock for the first time in God knows how long.
I thought you was gonna make a slight slip up there. I thought you was gonna say welcome to the SpaceX podcast. I mean the Sharesify podcast.
Yeah.
It has felt SpaceX.
You've mentioned it. You've mentioned the name. But anyway.
But it's worth saying, the last two trading sessions, of course, we've seen it collapse. The shares have gone down about 8%. What's going on? It's obviously rubbish, right? Yes, I mean just a little bit of pressure being taken out of the tires, but it's still up $185 odd. So massively up on its IPO price, which was already on a very frothy rating. So make of that what you will, investors and listeners.
Yeah, but the AI trade's still on, alive and well, isn't it, Steve?
Yeah, absolutely, and interesting. So Tim Cook gave an exclusive interview to the Wall Street Journal, I think on Wednesday night, and basically he lit a fire under memory stock. So we've been talking about memory chips and pricing being very, very firm for a while now. And what he's basically saying is Apple are going to have to raise prices of their next generation iPhones, iPads, etc., because they can no longer carry the additional cost of these high memory chip prices. So of course, Sandisk went bananas, Micron Technology went bananas, Samsung, SK Hynix, they all made gains of 5 to 10%. And it's simply because investors are now perceiving this as this memory chip cycle has got further legs to run than we expected. So it'd be really interesting to watch out for Micron Technologies results, which are due out next week as well, which we flagged up in our piece. But so that part of the that memory chip part of the market absolutely going gangbusters.
It is. I mean, talking of AI, I've noticed a couple of interesting little things along the way, little signposts along the way. So you remember Allbirds, which made fancy sneakers and trainers and so on, James. Then it called itself Allbirds AI. Well, it's now known as Smartbird, and it's actually hired a CEO from a Danish AI company. There's another one called Thinking Machines. Now, this is great. This has raised $2 billion from investors without telling them what it's going to do. It's just doing something to do with AI. Now, if you've studied history and you go back to the South Sea Bubble in 1720, there was a company which said that it was raising money for a project, the nature of which will be revealed in due time. The founder of that company,
it leans into the .com era. I mean, that will be
really
within
does.
the memory span of many of our listeners. And of course, there was this trend, which was an awful trend, but you tap on a .com to the end of your company name, and suddenly, allegedly, you're going to get an internet stock premium. Well, that didn't really work in the long run. Certainly not in the long run. It's not going to work in the long run this time around either. So just be wary. Companies attaching AI to their name. There's probably good reasons why they're doing that.
Well, it's the funniest stocks. I mean, I remember very clearly in the tech bubble how electric utilities were suddenly going to be internet stocks because they were going to put the internet over their transmission wires. Now we've got Valeo, French car parts maker. The car parts sector's been horrible this year. The stock is up like 15-20% because apparently it's going to make chip cooling solutions to revolutionize data center efficiency. And the stock's been on this absolute tear. We're getting these little signs along the way. But actually, James, we've also had some really interesting developments in the investment trust world this week.
We have, which we've covered on the site. A couple that caught my eye were Foresight Environmental Infrastructure. So that one, there's lots of headwinds facing the sector, but the resilience of that portfolio has really shone through. It's kind of a one-stop shop. It's got a bit of everything, a bit of solar, a bit of hydro, a bit of wind, positive NAV performance, and confirmed they're on track for a 12th consecutive year of dividend increase. And another one out today, JP Morgan European Discovery. So that's the trust focus on the European small cap space, extended its winning run of outperformance to 10 years now. And the managers think that, there's lots of value in that patch, and the small caps are overdue a resurgence. And of course,
we of course had an interview, didn't we, with Jack Featherby, one of the trio of managers that run that trust. So I mean, if you want to tune into that, Jack Featherby, a really interesting take on his view on European markets, and of course now you've got the results as well to back up the story. So definitely well worth researching.
Yeah, definitely. And personal assets as well, Ian, which is one you covered. Very interesting move into the Japanese yen for the first time. What's going on there?
Well, this is very interesting because their job is to protect and grow investors' capital, and they're very clear about that. And they say, it was a bit of an unexciting year for them versus the market. They beat CPI as you would expect them to, but they lagged the market. But what I found much more interesting was the positioning. So the stock, actually equity part of the portfolio is very small now. It's kind of around 20%. Most of it is in short-term instruments, and the new development is they put 10% of the portfolio in Japanese government bonds, short-dated Japanese government bonds, because the yen is always a safe haven currency. So if and when the whole momentum market kind of rolls over, they're in the right place. But also they say that the yen is at something like a 40-year low, and I'm seeing more people making comments on this. It's very difficult to make currency calls, but I think the consensus is that the yen is a good place to be looking right now. And of course, next week we have our webinar with AVI Japan Opportunities Trust. So I'm going to be putting that to them. That's an interesting thing. Steve, you also put a piece out on investment trusts this week on the best 5-year performers.
Yeah, and it was really focused on those that are concentrated on the UK. So they might not be exclusively UK, but the large part of their portfolio is focused on the UK. And I thought there were some interesting names thrown around. Temple Bar had one of the best 5-year records, and there was a few familiar names in there, some of which we've had on the podcast. So that's well worth checking out. We do these regular deep dive research pieces into investment trusts, into funds, into stocks. So there's lots of ideas been put out there with justification of pros and cons, and go and have a look, go and read about it, go and do your own research. You might find some really useful tidbits in these research pieces.
Yeah, absolutely. Now, you've mentioned Micron, obviously coming next Wednesday. Shares up 300% year to date. That is going to be a proper test of the AI enthusiasm. And James, you've got quite a few consumer companies coming.
Yeah, very busy week. So we've got Halfords, so we'll have to deliver another upgrade. There was quite a surprise upgrade in April, actually. That company's got quite a patchy history, certainly downgrades in the time I've covered it. And also we've got results from Gear4M Music, another one that's been on a very strong upgrade cycle, Moonpig and Card Factory as well. Another one that might be of interest is ProCook. So this is like a kitchenware brand that's been expanding under new management, and I'll be very keen to see, if that like-for-like growth has stayed positive, if they're still taking market share given that very tough backdrop.
Yeah, and we've got other companies as well. Like Nike reporting next week, FedEx reporting next week, Walgreens Boots are reporting next week. So there's a lot going on. It's already seemingly starting to accelerate into the next quarter of earnings. We're not quite starting going quite yet, but it's going to come around pretty soon.
No, absolutely. I'll be looking at Berkeley Group. They had the house builder, London-based house builder. They had a strategy update in April that just went down really badly with stock at a 5-year low on the back of it, because they basically said, we're not making any money on new land, so we're going to stop buying new land. We're going to ration the work in progress to basically better meet customer demand, which we know has been it started off the year okay, and then of course conflict in Iran, consumer confidence got hit, inflation starts to go up. So that'll be very interesting to see what they say, because we're now in June, the financial year ended in April. Have things improved? Have they got worse? That's all to play for, really.
Yeah, I mean, I suppose it's a bit early days to expect to see a marked improvement from a sort of a strategy shift. So it's more a case of cementing that strategic shift and looking for other evidential signs that it's not going to cause too much damage before things improve, if they will improve. I can't really see that they're going to have instant successes to report.
No, as I say, I think a lot of it will be how's the market been? What's the market looking like for FY27? Can they speed up that work in progress and hit their completion targets? I think, chaps, that's about us for today then, for this week. It's been
Yeah,
real.
listeners, I mean, remember, we mentioned it previously, there's still time. You can register for free for this webinar. Two different trusts, you get a good view about Japan. So Ian's talked about the yen factor. There's good talk about Europe as well. So there's really good touch points, two presentations, and your chance to ask those managers direct questions. So anything that's on your mind, portfolio performance, positioning, whatever it might be, you can email them in live in the webinar and we will pitch them to those managers.
Yeah, excellent stuff. Well, chaps, have a great weekend and thanks to everyone for listening.